Good morning and welcome to the Tech Lab Brief, your daily heartbeat of technology. Reminder that the reports of the AI machines taking over have been greatly exaggerated. Today is July 30th, 2026, and this is your AM Brief. Today, the title of our story, How Much for How Much? Today's Thursday, which means that we'll be doing a financial review of all the tech companies that are currently dominating the markets, and let's just jump right into it. Microsoft collected. Microsoft reported $90 billion in revenue last night, and Azure passed $100 billion a year for the first time. That same week, the UK's competition regulator opened an investigation into whether Microsoft's own customers were misled into paying more for Copilot. Copilot. I actually listened to Microsoft's earnings report yesterday. I wanted to hear Mr. Satya Nadella. I wanted to hear his voice, and also Miss Amy Wood, CFO of Microsoft. I wanted to hear what they were to say. It was about a solid 30 to 40 minutes of prepared statements. They were literally just reading off a script like I do, and I cut to the side cameras. And then at the end, the last 20 minutes or so, they took questions from the folks who dial into the call. It's fascinating how these earnings reports go. And yes, I mean, what they report on the scripts are I found to be quite important, but also the questions I found to be much more important, right? What were the questions being asked, who were asking them, and also try to figure out why they were asking them. And on the side of answering, who answered it, because it was either the CEO or the CFO. And then, what parts of the question were they responding to, or what didn't they respond to? And obviously everything's about AI. But going through Microsoft's earnings report, one comes to appreciate how large of a company they've become and how many assets they have in the form of other companies and product lines that they own. Let's not forget about good old LinkedIn. There's Xbox, and then they own like a whole set of gaming companies. And of course, there's a good old Windows operating system. But no, right now, everything is all about Copilot. And everything that they're reporting right now, Copilot and Azure. How could we forget about Azure, which is their cloud platform, which is also driving a tremendous amount of the revenue because they have their GPU infrastructure. And there have been, I think we reported earlier in the week or last week about how Microsoft is currently offloading are currently at such a capacity to run their GPU infrastructure that they've to favor Copilot, that they've actually stepped away from they've had to turn down customers on the Azure platform. So we'll see how all that plays out. But based on what Microsoft reported, their Copilot seats have gone through the roof. Their numbers are doubling year over year, which honestly surprises me a little bit because from what I hear, everyone's using, the OpenAIs and the Claudes. And I would just put this last asterisk in there. We did report on this earlier too, that Microsoft is currently undergoing a class action lawsuit on securities fraud, basically asserting that they've just been reporting false information on their earnings reports. This was last year, right? So the lawsuit came out earlier this year about what they were doing last year. And, I don't know. Take that for what it is. No judgment here. Still pending. And as we say here on the show here, only time will tell. So how much for how much? Starts with Microsoft. Now let's look at another tech company that did their earnings reports yesterday. Meta, grounding their cash. Meta grew 28% to $6.8 billion. Its free cash flow was $784 million against $10.9 billion in the same quarter last year. Free cash flow means that the company has money to spend after expenses. So you could kind of think of it like profit, but it's more like money that they have to spend that they would rather invest in growing the business than paying out to shareholders which is something they could do too. But in this case, or in this year, Meta reported their free cash flow at $784 million, which is just a little bit, it's still a ton of money. It's just less than $1 billion. And by comparison, this point last year, they had $10 billion of free cash flow. So where's all that money going? Well, where do you think? We reported earlier in our earlier briefs about Meta releasing their Muse Spark. You see the money coming out of the Meta factory from all the ad data they've been pushing to us. And then where's it going? Into the data centers. So CapEx was $31 billion this quarter against $17 billion. And we discussed about CapEx in a previous brief. It's basically, at this point, just think that they're spending the money. It's investments that they're making to build out data centers. Now, CapEx can be anything that involves like an investment to grow their assets. But right now, it's kind of all about data centers. And while they're also trying to grow the AI program as well. The earnings were missed, and their stock took a hit, 9%. Yes, they are currently undergoing a lawsuit, which is hurting them. Well, and as is Microsoft, as reported earlier. But it is what it is with these tech companies. We're seeing everything move so fast, and I'll be honest, starting to get a bit of a headache. But maybe that's the point. I guess first I'll make a point back to the how much for how much, right? As we're consuming all this tech information and news and knowledge, trying to level up our brain for something. And how much for how much is how much of my brain do I really have to keep bashing against this wall, climbing this mountain that is this technology Everest that is AI. And then we come across some silly story like XAI suing the state of Minnesota. XAI has sued Minnesota's Attorney General to block the state's first-in-the-nation law on AI nudification tools before it takes effect this weekend. XAI says it already bans that use. Its argument is that the law is written so broadly it reaches ordinary edits and satire. Yeah, that's a headline, guys. XAI, which I believe just went public with SpaceX about a month ago, sues the state of Minnesota over a law about nudification. And just to, I guess, clarify a point here, nudification is the process of an AI basically taking the image of a person and then removing their clothes and undergarments to show their private parts, because apparently that has become a particular use case of AI. And XAI founder and owner, Elon Musk, has decided to fight that law, to go against that law, because he doesn't like the way it's written. And he's basically like, we already banned that. We already don't do that, right? So there's that, right? XAI is claiming that their AI already blocks that use case. So why do you even have this law? Kind of why do you have this law in the first place? You'd think that as a what's the word? An upstanding American corporation, we wouldn't do anything as morally failing as that, right? Also, XAI is basically saying we already banned that, but the wording of this law, it seems too broad in general, and I feel like the government might use this against us in a later point in time. And I was fascinated by this particular segment. I did want to look up the law itself, and access to nudification technology will be banned. This is official wording from the Minnesota House of Representatives. Effective August 1st, a person who controls or owns a website, application, software program, or other service must not allow a user to access, download, or use the website, application, software, program, or other service to nudify an image or video, or nudify an image or video on behalf of the user. So that's I think that's the official law, and then there's a whole bunch of extra, I guess, words after to more details. And, it says, it also gives guidance on penalties, on civil penalties of up to $500,000 for each unlawful access. That's, I don't know. I mean, really, we really shouldn't be doing stuff like that in the first place. But if someone does and then you punish 500 grand, it seems reasonable. So, but where on that does it say about being like, I don't know, the law seems pretty specific to me, and XAI is suing Minnesota on the claims that the law is written so broadly it reaches ordinary edits and satire. I guess if we're going to go into the semantics of the word nudify, there could be something we might be able to help XAI build their case or help justify XAI's case. But I think we'll move on from there. The point's sufficiently made. How much for how much? In this case, 500 grand for making a person look naked. Something like that. And introduce today's knowledge segment. Our knowledge segment topic today is follow the money. We'll go on ReChat, which is our AI chat replaying app, and open this conversation called AI Capital Flow and Investment Analysis. Map how money moves through the AI industry. Just read out the question first. All right. We're going to map how money moves through the AI industry. From an advertiser subscription, or a cloud provider, through chip makers, into the data center, and say where it can be counted more than once. So label the assumptions, utilization, depreciation schedules, and who carries the risks. Mark clearly which of your claims are contested rather than settled. Do not assert any company's actual current revenues, capital spending, so don't be specific about any specific company. Give the strongest case that spending is productive investment, and the strongest case that it is circular, and name the one number that would separate them. I like that one. The one number that would separate them. All right, let's just sit here and speed read this together. Did you get all that? So that was a lot to just read through. And if I'm going to point anything out, let's start with the layers. I like the layers I went through. Yeah, here we go. Start with the lowest layer, right? Data center and developers, real estate, power infrastructure, which goes into chip makers and hardware vendors. They get the cloud providers, and neo clouds is an interesting word. It's like a smaller cloud, like a smaller cloud, not quite cloud, but almost cloud. Interesting point. Interesting thing there. Model developers application layer, right? And then that's close to the level that we operate as end users, which is like the chatbot developers and the chat software itself, and then where does it run, on the cloud, and then the chips that they run on, and then data centers that host everything. It's an interesting model to look at in these 5 layers. And that's exactly what this diagram portrays. Structural assumptions and risk profiles. This formatting can be a lot better. High density cluster utilization. Because how much of the data center is being used. Server depreciation schedules. So I'm gonna like this. Utilization, depreciation schedules. Server hardware and technology is 3 to 6 years. Data center, power shell, and power infrastructure. Depreciation. So that's the thing about investing in all these data centers, is that depreciation is going to hurt. Because technology is always evolving. There's going to be new technologies coming out, and it's going to devalue the existing technology. Equity holders and VC. Bear model performance risk and end user class. Bear debt leverage risk and capacity utilization. Hyperscalers. Bear technology transition risk and balance sheet capex churn. Oh, these are the risks I see. Oh, so the equity holders and venture capitals bear the model performance risk and user churn, because they're the ones putting money into all this. Neo cloud and hosters bear the debt leverage risk and capacity utilization risk. Right? So they're taking the debt, they're taking the loans out, And then they have to make sure that there's people who are going to actually use these clouds. Hyperscalers, that's basically the data centers. They bear the technology transition risk and balance sheet capex rate. That's basically going back to depreciation. So if they value the chips, then it might, you might get obsolete. It's after you have might get obsolete. Balance sheet capex rate. I'm not sure what that is. Not just an energy provider with long-term demand, their ability risk on multiple build-outs, right? So once the data centers are there, they're going to burn all the energy, and that's something that we've been covering too. So, mechanism, double counting revenue circularity. Guys, I want you to pay attention for this one. This is where everyone's talking about this AI bubble. It's right here. Revenue circularity, right? So money is being passed around all these ways, right? And it's like Microsoft they're building data centers, they're a cloud provider, they have their own models, right? They have everything, except they're also investing into a company like OpenAI, right? And OpenAI is a model developer of their own. And then you have OpenAI, which is also being invested by NVIDIA. And they're all just kind of passing money this way and that way. And we're trying to get down to the bottom of where's like what is the true value of all these capital expenditures that are being made to expand the AI technologies, which brings us to that question of the day: how much for how much, right? Is this all playing out properly? And if we just guess, gets a little too deep here to be honest. I mean, let's start talking about circularity. So let's read this carefully, though. Mechanisms of double counting and revenue circularity. Counting the AI ecosystem can appear multiple times on aggregate industry financial disclosures, creating an inflated sense of organic market size. Vendor financing and equity for compute swaps. A chip maker or cloud provider invests equity directly into an AI startup or foundation model lab. The startup uses those exact funds to purchase chips or rent compute capacity from the investor. The accounting impact is that the cash outflow appears as an investment on the investor's balance sheet, while returning as high margin revenue on their income statement. A chip maker or cloud provider invests equity directly into an AI startup or foundation model lab. So a chip maker or cloud provider, let's say like Microsoft, invests equity directly into an AI startup or foundation model lab, like OpenAI. The startup uses those exact funds to purchase chips or rent compute capacity from the investor. So it's like OpenAI. Is taking the money that Microsoft gave them or invested into them and using that to pay for Microsoft Compute. Neo-debt monetization and wholesale reselling. A hyperscaler or specialized provider purchases hardware from a chip supplier. A hyperscaler or specialized provider purchases hardware from a chip supplier. Okay, reasonable enough. A neocloud borrows against those server assets as collateral, rents compute capacity back to the original hyperscaler or associated labs, and both entities recognize top-line cloud revenue. So in this case, the cloud provider and the hyperscaler, which is basically the data center. Well, okay, this is normal. A hyperscaler and special provider purchases a hardware from a chip supplier. They have to do that, right? They're the data center. They need the hardware and the chips. A neocloud borrows against those server assets as collateral, rents compute capacity back to the original hyperscaler. Well, that just seems like business as usual. This one is, I don't know. A cloud borrows against the server assets as collateral. They borrow against the server assets. Well, that's interesting. So they're taking a loan out against these assets, rents compute capacity back to the original hyperscaler or associated labs. They rent it back to the hyperscaler? Well, that's just weird. If I understand correctly, it's basically saying that these cloud providers are borrowing money against the hardware to then sell it back to the hardware, sell it back to the data center. I'm gonna have to sit on that for a little bit. Maybe a little bit of extra research we can do. Multi-tiered subcontracting, chain of revenue recognition. An enterprise pays $100 for an AI-powered software subscription. The software company pays $60 to a model lab for API access. The model lab pays $40 to a cloud provider for compute. The cloud provider pays $20 to a hardware vendor. Well, that's just, again, business as usual. Well, okay, let's look at the accounting impacts. Total nominal revenues aggregated across all 4 industry participant layers equal $220 is better than $100 of revenues or economic value. Ah, I see. Right. So total nominal revenue adds up to 220 because if you take this 100 and you add together all these costs going down the funnel, it can look like $220. But really, the only real value is $100 from the end user going to the system. Are you on time? Got 2 minutes or so. We'll kind of jump to the rest, maybe continue this later. Settled versus contested claims in industry structure. Settled claims, contested claims. I see. So what is actually true and what is still kind of speculative, right? What has actually been confirmed and what is the economic case of productive investment versus circular bubble. Productive investment versus circular bubble. Right. That's the question we're trying to get down to the bottom of. What is actually value? What is actual productive value? What is just money being thrown around in a circle? And then this is the key point here. The one number that separates them. A single defining metric that separates productive infrastructure investment from a circular capital bubble is, sorry for the bad formatting, end user net revenue per watt. End user net revenue per watt. The total annualized non-AI vendor revenue divided by the total utility scale operational power capacity dedicated to AI compute workloads. All right, we don't have to read all that. I'll simplify it for you, right? Burning all this data, using an AI runs a GPU, which burns all this wattage, which is the wattage that data centers have to pay for. Eventually, data centers have to pay for at a certain rate, right? How much revenue is generated off of that much watt being burned? That's a lot of layers to get in between to get down to that final number, which is the final point we'll make and bringing an end to today's knowledge segment and also bringing an end to our brief. Hope you enjoyed it. And now gotta finish off with a good Zen and begin. All right, that's very close. Have a good day. Let's lock in. See you at 5.